without any delay, we'll start, and I'll give the introduction again because a lot of people have joined late. Raghav is one of the directors of Ludhiana Stock Exchange, and he comes from a family of traders. His dad is a broker and who is associated with Ludhiana Stock Exchange for last 30 years. And Raghav has 12 traders working under him, who are trading different kind of strategies with him. And yeah, I mean, this is what I was told. I mean, so we'll start, Raghav, you coming from a trader's family, take us as back as possible when you gained, when you were in class ninth or 10th, or maybe even before that. And like, how did you get introduced to trading? And like, it happens in many business families that we don't want to do our core business. So, like, did you want to be a trader from the very beginning, or you started liking after, बोला गया कि आओ गद्दी पे बैठ जाओ?
Yeah. So maybe I can say it all started it kind of started when I was in class 6. So basically till the time I was uh, I was in Ludhiana itself. In class 6 I joined a boarding school, Mayo College. So once I went there, so the thing about trading was that fascinated me was that a lot of people in because my father was doing it and I was a pretty small child. So that time, I was fascinated by people, always shouting and not like you see in the movies, but yeah, shouting at each other and clicking the keyboards at such hard speeds. And it was so fascinating to see ki, हाँ यार, what is even happening here, and everybody is doing work as if they're the only people who have some work, and I had never seen something like this. So when I used to come back from my vacation, so I was in a boarding, so I used to stay in my school for like 10 months a year, and 2 months I used to be for my vacations. I used to come back. So whenever I used to come for Diwali, I we used to we all three of us used to go to our dad's office. So I was in class 7, and I was very close to one of my employees. So he was like a friend to me. So we used to keep sitting and chatting with each other. And I don't know, like I was like that time because I was in a boarding school. So I never knew how important is money because when you're in a boarding school, everything is covered for you. You already have everything because you don't have to pay for anything or you don't have to manage your money or something like that. So after that when we were in the Diwali puja that time, my employee, he just told me, he just clicked the keyboard like twice or thrice in like 2 minutes. He said, "Ye dekh Raghav, 10,000 rupees ban gaye." And I was surprised. I said, "Ki is this so easy?" "Yes." "Did you just make 10,000 sitting in front of me?" And I was like, and I didn't know that time, how much is 10,000 and what ROI is that and what trade did he take. I just saw that he just clicked a couple of things on the keyboard and yeah, he just made 10,000. So I asked him, "Can I do that?" So he said, "Yeah, even you can do that." He told me to, like I still remember it was some stock. I don't remember the name, but yeah, it was some stock, and he was doing some NSE BSE arbitrage kind of thing. So he told me to do that. I did that, and you know, within 3 minutes, I made 4,000 rupees myself, and I was in class 7, and I was like jumping. I said, "I don't know what has happened." So so since there it all started. So after my school, I went to Bombay for my college. Over there, since I was so already, there were a lot of people who were trading. So my father told me to learn technical analysis. So when he told me to learn technical analysis, I honestly, there has been, I can say I have at least attended more than 200 workshops. I don't think there is any workshop on technical analysis by any famous trader or non-famous trader, be it them on Twitter or not. I have attended each and everything. I mean, more than my college, I used to attend, like every weekend I used to find some courses that I could attend because it was so fascinating because I knew that I could not trade that time because my father wouldn't have let me trade it in college. So, it was so fascinating. All the traders teaching, someone was teaching buy above VWAP, someone was teaching RSI this, RSI that, and then super trend. And money making looked so easy. And I was like, yes, once I complete my college, all I am going to have is money. There's nothing else that can stop me. I'm going to be a billionaire. And I don't know what all I had thought. So, after that, when I asked my father for the initial capital, he straight away asked me, what do you want to do? Matlab, if I can tell you in a Punjabi way, so he asked me कि करना क्या है तूने, एवं जाके बाद में पैसे डुबाने ही है, तूने क्या फायदा, तू मत कर, जो ब्रोकरेज और बाकी काम है उन पे फोकस कर. So I was like, why? Every technical analyst is making so much money. Everywhere on Twitter and YouTube, everyone is making so much money. Even I can make so much money. What's the harm? So then he told me, and it was a fact that in his 30 years career, he has had a lot of clients, but there has not been a single person who has consistently made money based on technical analysis. I mean, zero of our clients have been making money on technical analysis. So he gave me the 2 lakhs. He gave me an account and the margin in there was just 2 lakhs. So he said, trade in this and then show me after 6 months what have you learned in technical analysis. Whatever I had learned, I tried each and everything. And that, matlab, I wasn't losing money as such because I was really scared and I used to just trade like 2-3 shares, but I was definitely not making money. I was definitely not making money. So then I, started wondering what is going wrong here. I mean, how is it that every technical analysis is making money, but that everybody knows, like that maine bola tha moment ki he knew that the market is going up, he knew that the market was going down. Why did I not know? But eventually I realized that other person always knew where the market was going, but he would never make money because he cannot execute that way how he wanted to. So that made me go deeper into options, because my father told me that maybe if you want to do it as a business, maybe you can do it in options. Or you see, I'm not here saying that cash trading is bad or equities is bad or futures are bad or options are better. Everything works and nothing does. That is what I have learned till now. Everything can make money and nothing can make money. It all depends on how good one can execute what is going on in his brain. So once I started learning course by Quantinsty. So that course was named EPAT, Executive Program for Algo Trading. So over there, that was a pretty intensive course for 6 months, and over there I got to know a lot about options and how the basic market microstructure works and how our trades matched on an exchange, how our orders routed from the broker's server to the exchange, and how can you have an edge in execution by just being faster than a few microseconds than the other person. So that is how I started learning all those things. So when I was in my third year in college, I learned a lot of stuff it was all based on algo trading, and mostly it was on execution part. I mean, they were teaching everything, but I was only interested in the execution part because I thought even if I do the basic thing, if I'm doing it, executing it perfectly as I want to, I can still make money. But if I'm executing something extremely poorly, and even if I have the best strategy in the whole world, I got to know that I would still not make money. So yeah, so that was a major point in my life that I wanted to just focus on the execution part. Ki, matlab, whatever is going on in my brain, I want exactly that to happen. Like, you can say that I had a kind of OCD for that. Like, if something is wrong, even by like 50 paise or like 1 rupee, I used to get like, and even if that trade made money, I was like, no, that there is something wrong. That cannot happen. I have to be like 100% accurate. Though obviously I'm still not 100% accurate, and nobody in the markets can be 100% accurate. But yeah, my purpose was to be as close as possible.
Yeah,
So that really helped me a lot.
you said you attended 200 workshops, right?
Yes,
200
yes.
is a
I'm
large
not
number. So,
exaggerating. It would be much more than that, not less. I'm not exaggerating.
so was it like
Sorry to interrupt, but yeah, I think there are a couple of speakers in this spaces also and I've attended those workshops. So please, whatever I say, please nobody should take it in a wrong way, because I sometimes tend to speak something which I should not in a public forum. So please do
No,
not
no, no.
mind anything.
In this my spaces, the beauty is we only discuss ideas. We never ever discuss names unless we are praising someone. So everybody is
Yes.
safe, and I also plan to run paid workshop. There is nothing harm in earning some
Yes,
money,
there is no harm
and
in that.
yeah, and I'm sure we all are charging for our time. Okay, so we are not going to take any names, but experiences are very crucial. See, I have met people who have attended 5 workshops or 10 workshops, but 200 is a large number. So which year it was, and this entire episode of 200 workshop was spread over how many months?
This was spread over 3 years, over 2 years, I would say. My first year and my second year in college, I was attending all workshops based on technical analysis. And after 2 years, when I was in my third year, I asked my father for the initial capital, and after 6 months of trading live, after that, then I joined that algo trading course, and then I pursued everything based on those algo things and not based on technical analysis. So it was based over a period of 2 years.
So in technical analysis, like you learn the candlestick pattern, and you learn the Fibonacci and all these usual things which come in Zerodha.
Yes, yes. Yes.
Okay, and then like,
Say
were you
the
aware of
intermediate.
the con? Go on, go on, go on. I think Raghav, your line is still patchy. Can you like switch to mobile data if you are using Wi-Fi? Okay, I think we lost him. Uh, Nikhil, as I told you on phone, like you have to patch in to keep the conversation alive because we get so many disconnections. Have you attended any workshop ever, Nikhil?
Me, no. I learned it through a friend of mine, and then just through tasty trade and reading a lot of books and talking to people like you, Raghav, and all the other people. No, I have not attended any of the any because I've actually, truly speaking, I haven't found something that I would probably want to attend. I am not against attending a course or a structure, because I consider that as like an educational process. So if I find something I would want to do, I would want to attend, I would attend. But I have not found something that I would really want to spend my money and time on. So yeah. No.
Okay. Yeah, Raghav, you're back. So while you were a student, you were a student in Bombay. So whatever was happening on a weekend, like you're saying over 3 years, so maybe 52 weekends, so 200 workshops, like every weekend or more than a weekend, you are attending a workshop, right? Oh, I think we still don't have him. Though I have not attended any workshop ever, but I when I see a lot of people, and their work, I will not take any name, but it's pretty fascinating for a beginner, and definitely it shortens the learning curve. There are a few people who are very,
Yes.
very good in what that. Yeah. Raghav, you're back?
Am I audible now?
Yeah, you're audible. You
Yeah.
should
So
also buy Ludhiana में Apple का franchisee है. I mean, normal people I tell that buy Apple का phone, but you guys can afford a franchisee, so why not? So maybe they'll give you better reception. So going on. So what I was saying, you are attending like one workshop every weekend, right? It's
yeah,
like
yeah.
some people are addicted to Netflix, some people are addicted to reading novels, and you are addicted to definitely workshops. Like because
Yes,
after
I
five
was
or ten
addicted
workshops,
because the workshop, they weren't selling some course; they were selling dreams, and dreams sell. That is a fact. Dreams always sell. So
I
I
mean,
was
don't
being
get me
sold
wrong,
dreams.
but like you were already in dreamland, right?
Hello. Hello.
Yes.
So I'm
So
saying you were already in a dreamland. Your dad was a trader for 30 years, and you had like 10 to 12 traders teaching you or making money in front of you. So
Yes.
what fascinated you? You became more greedy. I mean, I just want to get into the reason of it attending so many workshops.
Yes, you can say I got a bit greedy, because the thing which was so fascinating for me was that money making looked so simple. Like, my father has worked really hard when he used to work. Nowadays a bit into his retirement kind of mode. So yeah, but when he used to work really, really hard. And all the traders also, like they were spending 10 to 12 hours every day without fail. And I thought that why are they working so hard? Making money is hard, literally so simple. Just analyze a chart sitting someday for an hour or two, and yes, you can make as much money as you want to tomorrow. So that was what was getting into my brain, because I was like, ki, nahi, I want to know this guy's strategy also. I want to know this guy's strategy also. I want to know what he is doing. So something was based on RSI, someone was based on some quant models, someone was giving risk reward of 1:8, and all that thing. So it was very fascinating for me. So all those 2 years, weekdays, weekends, whenever I used to find that some workshop is happening, I used to be there.
I mean, this question I ask everyone: did you have a girlfriend then in college?
What do you think?
I mean, looking at your profile picture, you are like looking so handsome, and backdrop mein Eiffel Tower is there, so you're filthy rich. So yeah, why not?
No. Initial 2 years I didn't. But the day
Yeah, I mean, if you're attending one workshop like every weekday and one workshop every weekend, I mean,
Yeah.
no wonder. I mean, no girl will stay with you, right?
Exactly.
I'm
So I
just
didn't
kidding.
have
Yeah.
that one that time, but yeah, when I had one, so I stopped attending workshops also.
Yeah, so
then I
see,
then I
this is
then I
inversely correlated, guys. Those who are into workshops, attending, I'm saying, and looking for girlfriend as well, you have to choose one. It's
when
a
I
tough life, I know.
when I had one in my third year, I enrolled myself for a 6 months long course, so that I don't have to look for workshops again and again.
I mean, tell us honestly, did she stay?
No.
दर्द है आवाज में बहुत दर्द है.
नहीं, yeah, she didn't stay. Unfortunately,
Yeah, I
or
mean,
fortunately, maybe I would say fortunately, she didn't stay.
if you go if you just ghost her, gone for 6 months for like one course, one algo course. What is algo? I don't know, man. You needed probably better guidance. But moving on, like, how much money you spent on these workshops?
A lot, because my father knew that trading is something that has a future. So he never stopped me from, because he was actually kind of impressed that I am trying to spend money on my education rather than going out and doing all that. So I think I have spent more than 5 to 6 lakhs at least on these workshops, because some workshops were very cheap, some were very, very expensive, and I don't actually know, and I haven't never kept a track, but I am sure I've spent much more than that, much more than that, because
Okay.
there was one workshop which I had specially gone to. I was in Bombay that time, and I had specially flown down to Delhi to just attend that workshop for Saturday and Sunday. So if you take all that cost, I'm sure that I have spent a bomb like on that.
Wow. Wow. So, like in every workshop, like you get some useful insights, right? For example, risk reward equation, the payoff equation, or knowing the fact that high probability trades are not the only trades. So, did you get any useful insights like in those 3 years,
Yes,
which you are using even now?
I would say once, after attending like so many workshops, once I actually traded live, the things which I should not do got instilled in my brain. I cannot really comment on what I found useful, but I got to know that this definitely does not work. So that was like one of my rule ki
What
yes, ye to nahi chalta, so I will not do that. So in that
what
way,
was that? What was that?
mainly number one thing was, trading just because your margin is free. Number two was,
I think we lost Raghav again. Being a Sunday, and he might be partying near Eiffel Tower. Background में voice noise भी आ रहा था. But I mean, don't get us wrong, guys. I mean, at least I can talk about myself. I'm not against attending any workshop, and I have discussed it with many other traders as well. You have to take it like a trade only. What my ballpark is, never spend more than 1% on one workshop. So let's say you attend 5 workshops, so you will be spending like 5% of your trading capital. Probably you'll get one useful insight from it, and it'll all be worth it. Definitely, it shortens your learning curve, as Raghav also said that, and this is a principle which I learned pretty hard way, much later. that you should not be worried about using the full capital, the full margin. A lot of us just take the entire margin to the hilt, to the neck, and then we buy OTM options so that we can have more margin. Generally, it never ends well. So that's one very big learning. Nikhil, you want to fill in?
Speaking about courses, I take it as everybody has a different learning curve. Some people learn through themselves, so they are very, very, very good hustler when they try to break stuff and then mold it back together themselves. Some people they catch what other people are doing, and then they mold it together for themselves. Okay, so there are different people have different kind of learning curve. So we cannot criticize one or like make okay this is better than that. It's all individual aspects. For me, like I like it. I like breaking stuff and then learning through myself. For some people it's other way. The most important thing I think what I consider like one should think when they are getting into courses or taking any educational course, and it may not be trading, it may be anything, it may be sales, it may be supply chain, it may be business, whatever niche you are in, is that you don't adulterate your experience through the experience of the trainer that he's giving it. So if he's giving a absolute like if he's using absolute terminologies, okay, this is always like this, you should not take it like in always like this. You should always take those things and then break it down themselves and then understand, is it always, or is it like from his experience, uh, like it might be that sound that. So it's just that you don't need to adulterate yourself through what you have learned through them, and that becomes a certain sphere of knowledge. You can break out and then mold other things, or whatever you learn from outside that circle, and then bring something up, build something of your own. So that's the most important thing. What happens is like what I see on Twitter is like many people just get into one circle. Mostly when I talk about circle, it's mostly about like one kind of trading style or one kind of uh, one person. They rally behind one person and they try to defend it through everything else. So they become like an extremist. They become like they try to defend that even if they know that okay something is wrong, or there's too much generalization that is happening. That is the only like bad side I see with courses. Otherwise, I think it might be a very fast learning curve for some people. So I don't think if financially it allows you, and you are clever enough not to take everything at the word. Uh, yeah, attending courses might be a faster way to learn stuff.
Yes, I would like to add on to this. It
Yeah.
is really fast to. It actually makes you really fast to learn things, because till the time you don't know what are technical indicators and how are they, calculated and all that stuff, you cannot really come to the conclusion that it works or it does not work. And as I again say, everything works for maybe somebody else, and maybe nothing can work for somebody. So what works for me will definitely not work for you, and vice versa. So if I had not attended things like that, so there were a lot of things which I would have never learned, and it was really actually a important part of my life, honestly, that I actually tried and learned. I was trying to learn that all those things.
Yeah. Before you said two things you learned. One, you said never utilize full margin. Second thing, I'll come to that. Before that, I just want to include in. Okay, Sandesh left. Yeah, Vanshika, you wanted a mic. You want to ask something?
No, actually, earlier the Elgo, conversation was going on,
We'll
so I
come.
thought that's it. Yeah.
We'll go to question answer soon. So yeah, Raghav, you were saying two things you learned. One was full utilization of margin. What was the second thing?
Yeah, second thing I was saying that indicators do not work on options. At least for me, they don't. And I
Sorry.
got disconnected that time. So
Uh,
yeah, there
uh,
were a couple of things that I had learned. Number one was risk reward, and second I can say never use your margin. Third was indicators do not work on options. Indicators should be kept very very away from options. You should not apply indicators on options chart. And another point was never sell penny options and try to generate alpha and try not to make money just solely because of leverage.
Wow, I mean that is a very useful insight. But like when someone is doing a directional spread or directional option buying, then indicators work, or then also it doesn't work.
See, again, as I say, they don't work for me. Maybe they can work for somebody else because they have a different application to it. But the way I apply indicators to charts, it does not work for me.
Okay.
Yeah.
We also have Sandesh. Sandesh, you wanted Mike. Like how drunk you are right now, Sandesh?
Not drunk at all. I'm not drunk. Why
Because
did
you
you
are
ask?
continuously laughing. So I gave you the mic. Or like tell us.
I'm not sure why I laughed. Maybe something you said, and obviously you're very funny.
Okay. Yeah, I'm very funny. Thank you. So moving on to Raghav, uh, tell us one thing. Like you're saying, like when you were in class 6 or 7, so that was like year 2006-7.
No, yeah, that was, I was in class 7 in 2009.
Okay, 2009. Okay.
Yes.
So like in the that great financial crisis of 2008, lot of brokers and sub brokers faced a lot of hardship. So what was the
Yes.
experience of clients who were associated with Ludhiana Stock Exchange, and did you see anything from close quarters?
No, I couldn't actually see because my father always kept me away from all that. But yeah, uh, now when I get to know whatever had happened, people were bankrupt, and I don't think if I'm just saying a random number, but if there were 100 stockbrokers in Ludhiana Stock Exchange, I think 80 of them went bankrupt because of extra funding and all those things. And that was a very hard time, very hard time, especially for everyone. But I would say that Ludhiana Stock Exchange survived, and everybody survived solely because people here don't offer leverage. Even when there were margin rules when we were offered 10x 20x leverage, our exchange we never offered any leverage to anybody. Jitna paisa hai, trade that much, otherwise don't trade. So I think that was a big reason for our survival. But yeah, that was a very hard time. And i have I know a lot of people who were like kings at that time, and now it is like their hand to mouth, and they are like, it is difficult to even support their families also. So it was a very hard time at that year. But I was always away from that, and especially I wasn't even in Ludhiana that time. So yeah, I never actually got to know about all that.
Okay, so basically, you're saying people who went bankrupt, common theme was too much of leverage and too much of debt.
Yes, so people used to get funded that time. Clients and people who didn't have money and they wanted to buy shares worth 50 lakhs, 1 cr, 2 cr, they used to get funded that time. They would like come up with like some 5-6 lakhs, and they would say we want to buy shares worth 50 lakhs, and once shares went down and everything crashed, so everything was over. It was only and only leverage that killed everybody.
Okay. So you're saying like now that you are director of Ludhiana Stock Exchange, like how many members are there and how big the exchange is?
Uh, there are a lot of members. So it is I think there are more than, I think, 10,000 clients if I calculate from all members. And but yeah, the main crux here is equity trading and cash, and people are not much into options here. A very few people are here into options, and things are starting to grow here also. Like clients have also started, just recently they've also started doing some algo trading. So let's see how things goes away ahead. But currently it was all cash trading. So the last 3-4 years, for apart from 2020 and 21, before 2020, like I would say from 2018 to 2020 crash, till that time, that was a pretty hard time for the whole exchange. I don't know about the whole exchange, just saying apart the point from clients point of view, it was a very hard time for us because clients didn't have anything to do. The easy money making time wasn't there, so it was a very difficult time.
Yeah, and like how meltdown of 2020 was different from great financial crisis meltdown?
2020 crash. I was here in Ludhiana also. So one thing was here the speed of the recovery. People were again kind of bankrupt, but yeah, you know, till the time your last hair doesn't go off, once you're in the stock markets, I would say it is an addiction or whatever it is. You cannot leave till the time you are not completely devastated. So the speed of the recovery, and after the recovery, markets going so much higher and penny stocks flying like anything. It was a dream come true for like people. What I have observed. So that was a big difference.
Okay. So, when did you actually, after these workshops were over, and when did you actually start trading, and how did you zero in that you have to do options trading only?
So I wouldn't name them, but I was doing a job for a year in Delhi once I completed my college. So I was actually planning to go abroad for my studies, but then for my work experience I joined a firm in Delhi, and I was trading there. It was a job based solely for algo trading. We were doing market making over there. So we were doing market making in the Gift City exchange, which is in Gujarat. So I was recruited for that. So that gave me a big boost because I actually saw for the first time that yes, trading option trading in any way. I wasn't an option trader at that time, but I got to know that yes, trading has a big scope if we consider like a huge corpus. Trading actually makes money if you're trading with a big corpus, if you're trading it systematically and with a team. A team is very important because you cannot scale if you don't have a team. That was what my main learning from the job was. So after an year of working there, then I was confident enough and I was learning a lot that time. I actually started being a futures trader. I used to do statistical arbitrage and pair trading and relative value arbitrage kind of things. I wouldn't say it was an arbitrage, but yeah, you know, the term statistical arbitrage, sounded like something to me. So yeah, I thought I would work on that. So I did a lot of that stuff. I was mainly into futures initially because I did not have that access to capital. So I wanted to make quick money very fast. But even after working for 1 year, I still had that mindset of, I want to make money in 6 years and in 6 months and then retire for the whole life. So after that, once I started doing the futures trading and a lot of things, I got to know that that is not my cup of tea. So slowly I went into options. I explored that avenue also. And I started with arbitrage kind of things. Like there are conversion, reversion, butterflies, and there are a lot of arbitrage kind of trades that we can do in options. So I only focused on that. And then slowly from there, things went ahead.
Yeah, but you said you started with Gift City, but Gift City resident Indians are not allowed to trade, right? And were you trading in like US stocks and US indices in
No,
Gift City?
so the company that I was working with, so there are Nifty and Bank Nifty futures and options are also traded in Gift City.
Yeah.
So NSE had come up with a liquidity enhancement scheme in which so you had to be a trading member first. If you are a trading member, you could enroll for that liquidity enhancement scheme, and then our work was just to provide liquidity to the other parties. We weren't traders as such, but we were officially authorized by NSE to give liquidity to them, and NSE used to pay us to provide them liquidity. So if you had to buy an option, I was the seller, and if I was and once so say you want to buy a call option and you were a non-resident of India, so I was the one who was selling you that call option, and to hedge my position, I would make a similar position through puts and futures so that I minimize my loss to an extent. The slippage which we used to get, that was our loss, and that loss was compensated by NSE.
Yeah, I mean that's a very good point. Actually, a lot of people ask when will we have liquidity in Fin Nifty, and
Yeah.
I always give the answer that whenever NSE decides to pay the market makers to take the other side to create depth to create liquidity, because that is done by the exchanges initially, because
Yes.
every participant will keep on waiting for the others to join. So that is what exchanges do whenever a new instrument is launched. So that's a
Yeah.
very good point. Like exchange was paying you to create liquidity.
Yeah.
So that's a very lucrative area as well. You get like 10 to 15% per annum kind of a risk-free money, isn't
Yeah.
it?
Yeah. Much more than that, actually. But uh, I think because at that time there weren't many people who were doing this, so NSC's rates were also very aggressive. And apart from that, I think there were only two companies, one in which I was working at, and one was in Bombay, which was doing this. And it was pretty fascinating, honestly, because you can do that at a huge scale, and that huge scale. And see, another thing which I learned was that ROI only matters up till a certain capital level. Once you have grown beyond a point, considering your capital, you don't care about the ROI. A 12 to 15% ROI on a huge corpus is 100 times better than 100 or 200% ROI on a very small capital. So I always, was fascinated by that because after all, it is the absolute amount of money which comes into your bank that matters and not the ROI eventually.
Yeah. So you had like your company had rented servers at Gift City, like, or you were working from remote?
We
Colo
were working
servers.
from Delhi, but yes, they had set up their servers in Gift City. But I wasn't really aware of all that because we were always kept away. We were just traders there, so we were only disclosed the trading part and how are things working at our end. The settlement with NSC and how much they were paying, we got to know eventually, but yeah, we weren't as such told, and we weren't in detail told anything about how they're working and how they're functioning.
So how many years you worked there?
I worked there for 1 year.
Okay, and like, why did you quit?
I quit because I
Hello.
thought that I can now, yes, I had actually quit because eventually I got confident enough that yes, I can do that full time, and I am capable enough of making good money on my own also. So that was the only reason, because I wanted to start my own thing in trading itself. So that was the only reason I left.
Okay. So when you came back to so right now you're trading from Ludhiana or from Bombay?
Yes, right now I'm trading from Ludhiana.
Okay. So what
So
all you do?
after I finished my job, I went to Bombay for a year and a half. I rented out an office there, and I was working. I was working alone there, but that was a co-working space. So luckily, I found a couple of traders there also. So we were three of us there. We used to come every day, and I was doing futures that time, so we were trading all that. And other than that, there was one co-working space in Mumbai which I had also joined, which was solely based for traders. So it was only for traders. All the traders were used to come there, and over there I actually learned a lot. That was actually my main point of getting into options, because the one of the people there was trading options that time, mainly Bank Nifty. So that was how I actually got introduced to options, and from there I actually took that up.
Would you mind telling us what were the names of those two co-working places?
One co-working space was, it wasn't such a name as such. It was in Powai. So it was just basically it was an app. I am forgetting the name, but the other one was from Saurabh Sisodia. He actually, I think it was the trade room. He had named it the trade room. So he had actually, I saw it on Twitter only that he was inviting people, traders, to like kind of rent an office there. So I went. I didn't go there for a very long time to Saurabh's place, but yes, I was there for like, I think, 15 days or 20 days. But other than that, I can. I'll have to see the name. What was of the app? I'll just look once and get back.
So any youngster, if he is listening to this podcast, would you advise going to a co-working space, or is it better to be in Bermuda and work from home?
No. It is definitely advisable to go out because you cannot do everything in your own room. You have to go out. Even though trading is a loner's job, till the time you don't get your network straight, you cannot grow and you cannot learn anything. It is a must
So
go.
is it
You
correct to
must
say that
go.
you learn? Yeah, go on. Is it correct to say
Yeah,
that you
I
learn
was
more
done.
from co-working space than your 200 workshops?
Yes, definitely. I definitely learned a lot of things there, which I didn't learn in any of the workshops because that was practical experience. Workshops were theory.
Yeah, and I'm assuming any trader who is renting a co-working space would be decently profitable to afford it.
Yes, exactly.
Then after you
So,
work for these
Saurabh,
two co-working, go on.
yes. So as I told you, when I joined Saurabh's co-working space, because he used to trade very heavily in options, so that was where my main interest grew. That yes, options can also be taken up as a future.
Okay. So you basically learn nuances of options from co-working space,
Yes.
and then you went back to Ludhiana.
Yes, I actually wasn't planning to go back to Ludhiana, but I was when the actual lockdown hit. I was there in Bombay for like 3 months. I had actually rented out up in an apartment alone. So I was staying there alone for 3 months, and I was it was a very difficult time to stay alone and do everything, clean the house, trade, and then cook for yourself, clean everything. So then eventually I just came back, and then I thought I'll go back whenever this COVID thing ends. But then I got set up here very well, and so I didn't look back
And now,
after that.
now this COVID thing is not going to end. So yeah.
Yes, so it's been more than a year and a half that I'm in Ludhiana now.
So when did you do this course that you were praising about 6 months course?
This was in my college third year. In
Okay,
my
much before the
final six
co-working
months,
space.
yeah, before this co-working space. So that course, what that course actually helped me, and why I praise that course so much is that it was such an extensive course. So theory, everyone can learn theory from anywhere. I paid a lot for that course, but all of that information is also available on YouTube if one is keen to look on. If one wants to actually learn, you can find everything for free on YouTube. But once I visited that course, so that time when I was doing this course, the COVID thing had not hit. So I used to go there, and I was the youngest one in that whole batch. We were a batch of, I think, 60 people, and the youngest person was me. And after that, the least age person was also 40 years of age, and mostly all of them were people who had, say, lost money in trading, or they were sub brokers and brokers or something like that. So you know going out and talking to people, that was a big learning experience for me, and I got to learn a lot of things there about market microstructure and how actually orders are routed. So most of the people who, matlab, again, I'm naming a few things, but yeah, nothing as such, but people who are trading on Zerodha, and they don't even know how orders are routed. They just open some window. They see ki ha HDFC Bank is 1400, we'll sell 100 shares. This put a market order, and then they're selling, and then they put a stop loss, put a target, and then they're waiting that either stop or target gets hit. But nobody knows how an order is, you know how an order gets matched, how an order is routed, how what is the speed of your order going through from your computer to the exchange, and how fast can you get, and what is the actual purpose of getting fast. Even if you're fast, can it help in profitability? And so that kind of things was a big learning experience for me from that course. So after
So,
doing that course, then applying all that things in live market was a big boost for me.
so you would like to tell us these things like how orders are matched, how orders are routed, and how time and speed affects your fill and price. I mean, if in few lines, if you can explain it to us in layman terms.
Yes, so order routing and order matching, I won't get into that because that gets a bit complicated. But the speed thing I can actually comment upon is that every broker kind of has a server through which your orders are going to the exchange, and there is a thing named as co-location. So co-location simply means that your server is inside the NSE building, not exactly inside the NSE building but very close to that. So you are directly connected through a lease line to NSE. So if I am placing an order and you are placing an order at the same time, my order would go to the exchange of very very less microseconds, but yeah, it would go faster. So if I'm doing an arbitrage, say arbitrage simply means an opportunity which comes due to supply demand imbalances, right? So if there is an imbalance, there are a lot of people who can look it from the naked eye and capture it. But because of these algos and the co-location speed that we can get, so no doubt that is very costly, but if we can get that, we automatically have an edge over others. That is not a very huge edge, but yes, that does make a difference if you're kind of doing an arbitrage trade. So see, if you're making an arbitrage trade, even 2-3 points in Bank Nifty means a lot, because say your expense is like 6 to 7 rupees per trade in Bank Nifty. So if you're making 10 rupees on that trade, on that arbitrage trade, that 4 rupees is my profit. But if I can make another 12, if I can make another 2 or 3 rupees, that adds to your profitability a lot in the long run, because the quantities are huge in arbitrage, because you're not losing there. You are losing only because of your execution. You can only lose there if your execution goes haywire. So that is a very important part in that.
I mean, I know a lot of stuff you cannot disclose on a public forum, but whatever you can disclose, when you're saying colo or co-location servers are expensive, what kind of expenses we are talking about?
So there are a lot of things like there are a lot of things that have to be set up if you're actually trying to set up your own rack at NSE. So if I just tell you in monetary terms, it is I can actually not very clearly disclose, but yeah, malab, you can say it is at the minimum scale also, it is like a lakh or two per month. But even that depends. So there is a message line which we brokers, every broker, Zerodha has a message line, IIFL has a message line, we Ludhiana Stock Exchange, we have a message line. So that message line means how many messages can be sent, how many orders or messages can be sent to the exchange per second. So that is also based. So we get 100 message line, 200, 400, 800. There are different versions through NSE, and NSE charges a lot for that. So say a 200 message line might cost you like 14-15 lakhs a year. So and an 800 message line would maybe cost you 50-60 lakhs a year. I'm just not exact figures, but yeah, somewhere close. So this is just the message line. Apart from the message line, the server might cost you maybe 1 lakh, 1,20,000 per month. So that adds up to like 12 lakhs per year. So it is a very costly process. But yes, it is only advisable for somebody if they're looking to do stuff which they are sure that can generate money on a very huge scale. And by huge scale, I mean like 15-20 cr. If you can make even 15% per annum or 18% per annum on say 15-20 cr, I don't think you need to look for 100% ROI strategies. But for that, like any business, so I am from Ludhiana. I know a lot of people here who are mainly into manufacturing and steel business, because manufacturing, Ludhiana is a hub for manufacturing, especially clothes. So people spend crores and crores of rupees just for their machineries, their fixed factories and a lot of things. So why can we not spend it for trading? I'm not saying that everyone can do that, and neither can I do that, and neither have I done that myself. So everything costs a lot. So I have actually spent a lot of money on my execution, no doubt. But you know once you're in a business, if you're thinking it as a business can make you money only if you're willing to spend some time and money on your business too. You invest in your business and the business gives you your returns. It's not that you just add money in your trading account and you will start making money from the next day. It's a long process if you're looking to do things at a good scale. So yeah, that is the main thing there.
Yeah, I mean, this is like really, really insightful, and this is not what we get to know and understand every day. Before we move ahead, my request to all my listeners, please take a screenshot and tweet about that you are listening to Anandable Spaces, which I'm sure you are enjoying a lot. Today, the competition is pretty tough. There's 10 spaces going on, and attendance is pretty thin in ours one. And a lot of new insights are lined up. So be a little kind and advertise about this space. If you can tweet about it, that will be like huge help. Raghav, so moving on, I mean, why I'm asking is, I mean, a lot of people like Nikhil, me, or Sandesh, or Saurabh is here. We actually aspire to be big enough so that we will have a lease line, we will have co-location servers, and we will have strategies which will be like more stable and low risk and lower reward. Doesn't
Yeah.
matter. So we are talking about like 5 lakh kind of a cost per month, including lease line, including colo, including your message per, as you said, 200 or 800. So 5
Yeah.
lakh rupees per month kind of a expense,
Yes. So
right?
the main
Yeah.
cost which comes is the message line. So the message line is a very costly thing. So if you're trying to go on a 800 message line, that would cost you a bomb. That would only the only message line would like cost you 4 or 5 lakhs a month. But if you're going for a 200 message line, that would cost you 1 lakh per month. So that is variable according to one's needs. But yeah, you can sum up, like you can say that a minimum setup of anywhere between 3 to 5 lakhs a month would be there if you're trying to set up something like this.
So basically, infra cost of around 1 CR per year in the first year at least has to be set aside for
Yeah.
contingencies and expenses and so on. Okay, 1 CR.
Yes, but
And
this is
just a
this
philosophical
is the
question. I know
cost.
life. Go
Yes,
on,
yes,
go on.
please continue.
I know life is not fair, and life becomes unfair the moment we are born, where we are born, and which family kind of, even which environment we are born. It decides a lot of our fate. So, don't you think like it's unfair advantage to the bigger guys who have faster execution, better lease line, better information, and better algos, and a retail guy is like that छोटा किसान जिसके पास केवल एक हल है, सिंचाई के लिए बिजली भी नहीं है, वो अपना बैल से हल जोत रहा है, छोटा सा उसका लैंड पार्सल है. So what are the chances of a small retail guy surviving in the face of these giants, sharks, who will just eat away small guys like lunch? Or retail has a nimble
Yes,
advantage or some kind of advantage?
see, it is a very unfair advantage, unfair
You there?
advantage to the big people, I would say. But
I think we lost him again. Yeah, go on, go on. Did you
yeah,
hear the
can you hear
question?
me? Yeah,
Yeah,
I
yeah,
heard your
yeah.
question. So mainly, I was saying that yes, I totally agree that it is a very unfair advantage to the big people who have good money to spend on all these things, and they would actually, never let retail people grow. But the thing is that you know you don't have to spend so much money on. You don't have to spend money on such things, because all brokers also have an option for. Not all brokers, I would say, but yes, if you try and look out for things, if your network is strong enough, you can make such a setup even with like 50% of that cost. And honestly, retail traders also have a big advantage that they can do stuff which institutions cannot. I am not saying that you know retail traders would definitely win over them, but you have to one has to know what their limitation in and what their advantage is. So till the time you don't take undue advantage of your own adva- I would say advantages, or you don't understand what your own limitation is, how can one grow? So if I say that a retail trader who knows no coding he says that I cannot compete with those big institutions. Why can he not compete with those big institutions? The only thing he has to learn is coding. No doubt he'll have to spend a couple of years or maybe 3 years on that. But once you learn coding, maybe you can set up your own algo thing. You can, in the beginning, you don't need such co-location servers and such fast execution because nobody is doing high frequency trading. So for your normal trades, even a market order is more than enough. It is, and especially Nifty and Bank Nifty has such good liquidity that no amount of quantity is too big for market orders or limit orders. But it is just that you have to know your own limitation. So I still don't understand. People say that we don't know coding, we can't do code, we can't code. Even I know how to code, but I'm a horrible coder. I think there is nobody who can be a more horrible coder than me. But you know, that does not mean that I cannot learn. I learned it. I know this much that what my coders do, I know how what they are doing, and whatever they are doing is not wrong. I only know that much of coding, but that is more than enough for me because my limitation was not that. So there is a big unfair advantage, but if you can tie up with brokers who have their own co-location servers. So see, in Delhi, especially in Delhi, there are, I would say, there are at least, I know at least 10 to 12 brokers who are providing such co-location services and execution platforms for you at say a cost of like 20-25,000 a month, which is almost 1/10 of what it would cost you to set up your own thing. So if you're spending 20-25,000 per month, you can actually be at the same level as any other institution. But people don't want to spend that kind of money because they say कि नहीं, इसके बिना भी हम कर लेंगे, ये भी हम कर सकते हैं, ये भी हम कर सकते हैं. So people don't want to, what I think, the mindset is such that people don't want to admit that yes, this is my limitation, and they don't want to, grow on that and try to fix that limitation. Rather, they would agree that yes, this is a limitation for us, because and they would blame the other people that yes, the bigger institution, they have more money, they have more access to people and all those stuff, so they can do that. Everybody can do that. It's just that you have to find such things, because co-location was a thing like 6-7 years back. Nowadays, mostly 90% of the people I know, everybody is doing things on co-location and such execution stuff, because mostly brokers are offering at a minimal cost. So if you're even handling, I would say,
Okay.
an account of 50-60 lakhs, I don't think you should shy away from spending 20,000 a month on that execution.
Okay. Before we move ahead, we also Sandesh has raised his hand. He is one of the best computer programmer, at least whom I know on Twitter. So Sandesh, go ahead. What do you want to ask?
So one thing regarding this co-location. So what my limited understanding is, these co-location servers, as Raga pointed out, are used for high frequency tradings like arbitrage tradings. And firms like Tower Research and WorldQuant, these are doing all these kind of arbitrage and high frequency tradings. So I agree that that we need high hardware requirements, which are very costly for setting up the servers. But even after those setup, I don't think it's very easy to earn money there, because you are ultimately competing with these firms only. So you have to write very uh, high quality and highly optimized softwares, so that your execution can compete with the executions of firms like Tower Research, which are already hiring like very expensive and by very expensive engineers to, like, who have real expertise in C++ and low level programming languages to write those execution codes. So even like I wouldn't say it's like a very unfair advantage. Like, it's not that it's like a different business they are in, and it's not free money on the table. It's still a cutthroat competition. That is what I understand. Like, I could be wrong.
Yes, this is a
Yes.
very, very good point. I didn't want to get into this because it would be a bit complicated for most. But yes, this thing is a very basic edge that you can get maybe over, say, 70% of the traders. But the actual people that you are competing with, there, after you set up that infra and everything, the main game comes on how are you going to use that thing? How are you going to build your execution engine so that you never miss a trade and you get the best of fills, and you can put maximum of your quantity at the best price possible? So that is a different ball game altogether. Once you're done with the infra thing, then comes the execution engine part, and that is the main crux of making money. Because there are different ways of doing arbitrage, and there are very different types of things that you can do, but everything is based on how you're executing it. So yes, Sandesh has a very valid point here. It is not a very big unfair advantage, but yes, no, I cannot deny the fact that there is some edge. If if my order is, say, reaching the exchange faster than you, so yes, automatically I have a slight edge over there. But in the long run, that edge is not going to make a big difference, because you and I are in a completely different game. You are trying to achieve something which I don't care about, and I am trying to achieve
We are
something that you
losing you.
definitely don't care about.
Your voice is patchy now again.
Yeah, so I was saying that yes, the co-location thing does give you a slight advantage over the others, but that advantage doesn't really mean anything, because what matters to me the most is useless to you, and what matters to you the most is completely useless to me. So we are in completely different businesses. So it actually does not make any difference. But I would again say that yes, it is a very important part, because after a certain level you need all those execution engines to work with.
I have a slightly different view on this, especially for Indian market. I mean, I might be completely wrong, but my understanding is that here most of us get it wrong that trading, at least in India, is winner takes it all. It's not so actually. It's just like it's just like your anda burji ka dukan, ya kapde ka dukan, ya kirana ka dukan. That everybody is earning little bit, and cornering a large share of market is practically very difficult. So we'll come to what kind of trades are being taken by HFT or Raghav is doing. But certainly, once you have set up the infra and the execution engine or coding, probably my understanding is a lot of people are using pretty similar uh, when I see it. And I visited one firm in Hyderabad and I saw their trades live. They were doing basically cash to future arbitrage in FNO stocks, and they were doing indices arbitrage this near month to next month, those kind of trades. And obviously those trades are not risk free, but sometimes there is a huge arbitrage opportunity, and it is there for a few seconds to few minutes, and every guy jumps into it. So I believe if someone has that kind of scale and infrastructure, then the point I wanted to highlight was that it's not a winner takes it all kind of a game, that a company like Tower Research or one or two firms are only surviving, which is the majority of the case in US. Algos are eating each other, and very few of them are profitable in the long run. But here, the first of all, arbitrage is so huge for various reasons. I mean, just to give you an example, if I take an example of a stock like HDFC Bank, there in all banking stocks there is an upper ceiling of 74% by RBI. So even if an FII wants to take advantage of that arbitrage, it cannot buy unlimited quantity. And such kind of arbitrage is there in USD INR as well. So I mean, anybody who is exploring in this area, I would say there will be some opportunity for everyone, in the sense if you can scale up to that area. And it's not winner takes it all. That's one. And second is, the way I understand arbitrage, the way it is being done in India is not complicated strategy wise. It's just buy one particular instrument and a heavily correlated other instrument you sell, and the lock-in profit is your profit. And the only risk is if the gap keeps on widening, which happens a lot, and then if you're on leverage, you can blow up the account. Raghav, what kind of advantages you are taking personally by having higher speed, and what kind of trades you are doing which requires colo
So,
or which requires higher liquidity?
firstly, I would say that arbitrage is a part of what I do. I also sell 920 straddle. I also sell. I also do NSE BSE arbitrage. I also do delta neutral trading in Bank Nifty and Nifty every day. So it is not that I do only one thing, but yes, the it is a part of everything that I do, because just exactly like you said, it is not that the winner takes it all. So if I'm doing something in arbitrage, that does not mean that I'm going to take it all. So there is, again, I have my limitations over there also. So according to my limitations, I have recently started, exploring intraday system trading avenues also, because of the, you can say, because what I've learned and what I've seen people do is that intraday system trading is also, very scalable in a different way, because, everybody does not have a capital of 1 CR. So if I have somebody who says he has a capital of 5 lakhs, he would not mind a 10-15% drawdown. If I can say that yes, you can generate a 50 to 60% return with a drawdown of, say, like 10%, maybe there are people who do all that stuff also. So yes, I am doing that also. But in arbitrage, if since we're talking about that mainly, if I talk about arbitrage especially, so the advantage over there is, again, that I would say is, the honestly, I would say the quality of traders that they have become my traders, which they're working with my father since a very long time. So they have a since they're stuck at the screen since like 15-16 years every day. They have a good knack of the markets. They know how to look for arbitrage opportunities. you know it is not like you just switch on your algo and you get money in the evening. You have to constantly look out and screen and scan for those arbitrage opportunities, at where are they coming from. Because another thing that, and I'll share one in more insight. So people think that end-to-end automation in arbitrage and all those things are also possible. Yes, it is certainly possible. Everything is possible, but that is my limitation, because the server, or whatever the server maybe that I have, I cannot keep constantly firing orders on that, because that then the server gets clogged. All my trading can get stuck if I'm constantly, if I'm making the algo look out for the arbitrage opportunities. If I'll explain once more. So you know there are two ways to find an arbitrage opportunity. One is that a trader is sitting at a screen whole day and looking out for them, and number two is that you switch on your algo and the algo is looking out for that. If your algo is looking out for that, your server can get clogged, and the efficiency that I need eventually might get disturbed. I don't know if it does get disturbed or not, but yes, it might get disturbed. So the crux here is that the trader has to look for those opportunities, where are they rising, and accordingly he has to trade, and accordingly then he has to start that execution engine, which would trade according to that.
So because of the limitation of how many orders you can fire, like you were saying, you were looking for arbitrage opportunities by naked eye or like some kind of other outside scanner.
So there are simple, since we are doing it since a very long time, there are simple things to look out for when we can, so you can always, link your broker's feed to your Excel. So we make our own calculations in Excel, which is very easy and everybody does that. That is not some rocket science. So we make those screens like that. So say there is something known as box spread. So you can make a box through options, and that box can maybe make you money. And but that opportunity would not be the whole day. So you have to constantly, look at your Excel, which was updating every second, and then maybe you can fire a trade accordingly. So yes, manual intervention, I would say, is of the trader, that he has to look out where that opportunity is. Because see, arbitrage is something that is happening every second in our exchanges. But the point is, if we are doing arbitrage, we are not doing it on, say, 1 lot, 2 lot, 10 lots, 100 lots. We have to do it on 1,000 lots, 2,000 lots, because the maximum that we can earn is like, say, 10, 12 points in Bank Nifty. So if you are only earning 10 points, say, in maybe 2 days or 3 days, so I cannot just do, like 50 lots or 100 lots on that and make good money. For good money, you have to find opportunities where there is depth also. And for that, you need a trader who has done all that and he knows how to do that.
So normally when I see NSE, BSE arbitrage, it's like 1%, 1.5% max to max. So how do like maximum, minimum, what kind of arbitrage you look at for it to be viable for you? That is one. And second is if you can disclose what kind of brokerage you are paying on these two legs of
So see,
arbitrage.
what happens is initially, so currently the interoperability of the exchanges is very good now. So, even if you have bought stocks on NSE, you can directly sell it on BSE and it doesn't, nothing happens. But earlier, I'm saying like 10, 12 years back, how my father started it, we don't do NSE, BSE now because hardly there are any opportunities there. And because, the interoperability is very good now. So earlier, what used to happen was, you can only do the NSE BSE arbitrage if you have those stocks in your holding. So that was a big edge because not everybody can keep a good amount of stocks in your demat account. So if you have money lying idle around, so you can you can say that yes, you're investing say 5 lakhs in HDFC Bank, though these things don't happen in stocks like HDFC Bank. But yes, say you're saying it in TTML is one stock which gives very very good opportunities for NSE BSE. And so such things, you earlier used to you earlier it was for doing this you needed to have it in your demat account. So yeah, that way it happens. But I don't know much about the brokerage part on cash stocks because that is not honestly my forte. But yes, we pay all our expenses are based on turnover and turnover based on crore. So we calculated based on 1 crore of turnover. So if I talk about options, roughly I am paying somewhere between 9,000 to 9,500 rupees per crore of turnover. So if I'm selling and buying options worth 1 CR, I would be paying 9,000 rupees as my expense. So that is how we calculated it. That is how we calculated it, that if we are getting an opportunity where we are making more money than what we are going to pay to the exchanges as you can say STT and exchange clearing charges and all that. So that is where we strike on. NSE
So
BSE is completely dead now because so we don't do that. It is only possible on stocks which are not very liquid and stocks which are say they are already in our demat account since a very long time. So yeah, we do it on them, but it is hardly any opportunities available there.
as a broker, you also have a membership of NSE as well?
Yes.
Okay. So basically, you're saying 9,000 rupees per crore you're paying to NSE.
Yeah.
Approximately.
Yes, approximately. There can be a big 500-700 rupees difference also, but yes, approximately 9,000 rupees.
I have seen some of the firms doing, arbitrage among options as well. When an option is, showing spike or getting mispriced, then they try to take advantage of that arbitrage. Are you active in that area as well?
So I would give you an example of this last Thursday. This last Thursday, 19,000 call option. I got fills for 19,000 call option at 2.8 rupees, and I got a fill for 19,500 call option at the same second for 2.95 rupees. 19,500 call option was higher priced than 19,000 call option this Thursday monthly expiry.
Yeah. So you do those kinds of trades as well.
Yes, we do those kind of trades as well.
Certainly, those kind of trades will not be viable for us at 20 rupees per order.
Yes, exactly. It doesn't make any sense at all.
So it's like unfair free money for you.
No, it is not unfair free money
I'm just
because
kidding.
oh, I know, but but to gain that unfair free money, we have to spend a lot of our own money to reach there. So I wouldn't say it is free because even after setting up such infra, you don't know whatever is gonna happen. You maybe exchanges just come up with a new rule and everything whatever you've done is all gone.
Yeah, it's
There is
like
a big
saying
risk here.
yeah, it's like saying Walmart has unfair advantage vis-a-vis a Kirana shop. The scale
Yes,
itself is
exactly.
so different, the procurement is so different, the customer reach is different.
Yes,
So I understand.
exactly.
Do you have any idea about the recent NSE Colo scam which happened, on which Sucheta Dalal wrote a book as well? If you have, like, because you're so much into Colo and arbitrage, so if you know what went wrong and like how it was handled.
No, I'm sorry. I have no idea on that. And I honestly won't like to comment on that also. But
Okay.
yeah.
Okay. So coming back to like your present option strategy, you said, right, you have 12 traders now, and few of them focus exclusively on option selling. Okay. So first of all, what is your view on option buying, and why you are not doing buying and doing only selling? And are you like a market maker in selling, or what is the strategy?
No, I am not a market maker in option selling. I am a very, very simple trader, and I do things that almost everybody is already doing. But it is just that I'm doing it in a systematic way, and I have diversified my own portfolio in all these strategies. So, see, even 920 straddle makes money, even a simple straddle and managing it makes money, a strangle and managing it makes money, everything can make money. But there is a different time for everything to make money. So if you're well diversified, your drawdown automatically comes less, which is easier to accept at a good scale, and automatically your returns are also good, because every year there comes 2 to 3 months where all of your strategies are making good money, and there also come 2 3 months where half of your strategies are losing bleeding money, and half of them are just covering for that, or maybe even they are losing money and you are also losing, but that drawdown automatically gets controlled.
So
So
when you're saying well diversified, like what do we mean by that?
well diversified, say, I mean different kind of option structures. So say yes, so I would say uh, I have one trader who solely trades iron flies. He does nothing else apart from iron flies. He is doing it on a weekly time frame. So he sells it on, he starts building his position on Friday, completes his positions on Monday, and then till Tuesday, Wednesday, Thursday, he only manages it. Very simple iron fly management techniques. You can find all of them on YouTube.
Like
Nothing very special.
if you want to share it like in a couple of sentences, like what do you mean by managing iron fly?
So say you're making an iron fly with a fixed loss of say 150 points on one end. So see, it is completely discretionary what that person does. So firstly, he would make a market view. View, by view I mean he would make a range which he thinks that the market would stay between. So accordingly, he would place a trade. He can make an iron fly or he can make an iron condor. He has his weekly target which he has to fulfill. By weekly target, we don't mean that yes, you have to make money, but yeah, that is the by target we mean that if we are achieving that amount, we are exiting it, and we have also a loss level for that same thing. So say I'm selling an iron fly, right? Uh, he so yes, I'll give an example. Say we sold an iron fly at 18,000 and hedged it 400 points up and down. 18,400 and 17,600 we hedge it. So after that, say market comes down to 17,700. It opens gap down the next day. So there can be multiple ways of adjusting it. You can completely shift the whole iron fly down. Maybe you can just shift only the straddle and keep your hedges as it is, or maybe you can only shift your call down, because our aim is to not lose money. So in an iron fly, we know that a maximum we can lose is say like 100 points or 150 points. So once things go against us, our only sole purpose is to cover those 100 rupees. We don't want to come out profitable, because that is not the only thing that we are doing. So even if you're not making money on that iron fly for that 1 week, it doesn't matter. We just don't want to lose money there. So automatically, if you're in a trade for 3 days and your simple range, say, is getting respected by the market, you're anyway making money, and that is an easy phase. Everybody is making money. But when shit hits the fan, very simple adjustment techniques here. Say, like his core adjustment, what I would say that he only shifts the straddle. So say, uh, I sold a straddle at 36,000. I hedged 36,000 for say like 800 rupees, Bank Nifty on a Friday. And so, for easier calculation, let's say we sold it for 1,000 rupees. So our break-even points come to be 37,000 and 35,000. So he would hedge it 1,500 points away. So he would buy 37,500 call and 35,500, 34,500 put. So once market is, so say that net credit which we receive is approximately say 450 rupees or 600 rupees, something like that. So our maximum loss over there, say roughly, I'm just giving a way number, say maybe it's 250 points or 300 points. So once things are going against you, he would only shift the 36,000 straddle and keep his hedges there it is. If he is expecting a trend. So see, that again, that is completely discretionary. If he is expecting a trend. So there is no quantum to it that I can define that. But yes, accordingly, he would keep continuing with moving with the market. He would try to keep his position in the center, simply like all option sellers do. And if still things are not going his way, we would exit. And in any case, we have a loss limit for every strategy for the whole week. If say if he trades an iron fly on Friday at 12 o'clock, and if his loss limit is reached by Friday at 2:30, he would not trade the whole week and he would be sitting idle in front of the screen and doing nothing. It is not that he
That's a
would
very
try to recover the loss and he would again do.
Yeah, that's a very, very big, risk management parameter that you're back.
Yeah.
So, what I was saying, this is a very big risk parameter. In fact, in my financial institution, I'll give you one example that things started going wrong in I think 2011 or 12, and our bond desk, like everything, started going wrong. And then there is a desk level limit that was breached, and then there was a head of trading level limit that was breached, and then MD level limit, and that was breached. And still 7 months to go in the financial year, and the trading on the entire bond desk was halted. And for 7 months, those five traders, they used to come, they used to drink coffee, they used to go home. I mean, of course, they used to have lunch, and nobody was fired, at least from my organization, and they did not trade. So this thing, there is a lesson for all of us retail as well, that when things start going wrong, just shut all your position, take a break, a predefined break you can take for a week, for a month, and clear your head and then come back. That's what big financial institution do. That's what Raghav is also saying, that if it's one guy doing one single strategy, weekly strategy, if that strategy gives maximum loss in like couple of hours, don't trade for another full week. So that's what retail misses to do. The compulsive urge to trade at all times, that puts us in the rabbit hole when we are not thinking straight. Yeah, Raghav, you're back.
Yeah.
So, we were talking about strategies. So one guy does iron fly. So similarly, how many strategies you are deploying, and have you studied the correlation or how non-correlated these strategies are among themselves?
So see, I haven't actually done a good research on the correlation of these strategies, but what this is a big learning for me from my father, which I have learned, is that you know in the stock markets it is all about you know a mindset of a trader. So see, a lot of our stuff is discretionary, what we do, but discretionary in a way. Our system is, everything is rule based. So see, if a guy is trading iron fly, he is only trading iron flies and he is not doing anything. He has his main rules for say entries, exits and all that things, but it is not very rigid that if we have to sell it at 9:30 we have to only sell it at 9:30. There are a lot of things which uh, he looks into, but the correlation part is the human brain here. We have If we have 10 traders or 12 traders sitting there, those 12 traders, everybody has a different mind and everybody has a different skill set to it. One thing is for sure, maybe if I make 12 strategies or if I make 120 strategies, there will be one time where all of my 120 strategies will be loss making. But if I have 12 traders, I cannot actually accept the fact that all 12 human brains would be doing everything wrong at the same time. One person has to be right. Okay, no problem. There has been a lot of times where all 12 of my people have also been in loss in a whole week. There have been many weeks, not only one, many weeks in a year. So say out of 52, there are at least 5 to 6 weeks which almost everybody is in a loss. But the diversification and the correlation there comes from the human brain. Because everybody, there are some traders who know that something is happening, so it is not a good week for them. So say one of my traders, he stopped everything from 20th Jan. He said he basically trades delta neutral options. He basically sells straddles and strangles intraday and then manages them through delta every minute by minute. So he's constantly managing delta, shifting strikes or adding new strikes and all those things. That is completely rule based, and that is a very big core strategy of mine. So, and a good part of my portfolio is allocated to that. But he himself came up to me and told me that I would not be working from 20th. That I would not be working from 20th because the budget is coming, and he is, for the whole month of January, he is in net loss in January. But he himself came up to me and told me from 20th that I won't be trading it because I don't think the market is suitable for me, and we would start from first. Till date, every day he comes to the office at 8:45 and leaves at 5, and he is sitting idle since the last 10 days, and literally he is enjoying the show, drinking coffee all the time and coming to me, and we are chatting all day because he has nothing to do, but he is very happy that he's not losing money, and that is a big part. So the correlation here, what I believe, is from the human brain. All right, so see, what my father taught me was that, say you have 10 people who are working for you. All right, you can give them a base strategy, but if you let them do what they want to do, and if they're serious on it, all right, say out of 10, just like we keep a winning ratio for our strategies, why can we not keep a winning ratio for our own people? Say out of 10, I have a winning ratio of 60%, and all those people are losing 1 rupee when they're losing and gaining, say, 1.2 or 1.3 rupees when they're gaining. I am automatically a winner. I can never be a loser. And just like I said, I never target ROI. My target is never an ROI because I don't have in mind that I have to make this much money, I have to make this much money. Obviously, there is a minimum threshold that, yeah, it is not that even if I make 0.1% of my capital in a month, I'm happy. But yeah, it is not that we have to make 2% a month or 1% a month. There are some months we have already also made 6-7% a month. There are also some months we have lost 2%, and there are many consecutive months that we have literally made nothing. But we have never changed what we do, and the traders evolve like that because that is how they come out of a drawdown. What I have observed, honestly.
Okay. If you can share with us, what kind of percentage return, I know you are not targeting, but ballpark that you're getting for so many years for your firm. As you said, these traders are old and they were with your father as well. So, I mean, these are like professional traders, I assume. So, what kind of return portfolio basis you are getting on your capital in percentage?
Yes, if I tell you in percentage, anywhere, I have been into this very actively and professionally since the last 2 years. So I'll only comment on that. For the past 2 years, we've been netting somewhere approximately close to 26-27% per annum on our entire portfolio.
Okay. So there are like many Twitter traders who make like 20% in a day or in a month.
Yes, there are there, and they can do that because maybe they can see that kind of drawdown on, or maybe I don't know, maybe they have some conviction like that. But what I believe is that you can only scale something if there has to be a reason to why you're making money, right? So say if some trader is making 10% a month or 20% a month, there is a reason to it. The reason there is insane leverage and insane risk taking capacity. Okay? Or your risk taking capacity and my risk taking capacity are like completely different, obviously, and with it will be with everybody. So I never come into that comparison thing because there are, I in fact, you will be surprised, I know a lot of people who are simply doing strategies which can be easily tested on stock mark, and they are managing huge amount of money, huge, and huge by huge I mean more than 100 cr, and the only reason for them making money is maybe they can take that kind of drawdown. They obviously, that might be clients money, and or whatever it is, I don't want to comment on that, but it is basically because maybe they can take that kind of risks. I cannot take that kind of risk because I have honestly not earned whatever margin I have myself. I have not joined it money, joining money myself. So I don't know if, say if I lose like 30% of my capital, what if I'm not able to, generate it back? Obviously, that kind of anxiety, everyone has that. So, you know, the maximum DD from the top, if I say, in my 2 years since I've professionally come into this, has never been more than 4%. And I am very happy with that. And that is why my returns are also very less. But I am very happy with it. And there is no comparison to this because you see, Tower Research would be making, I think, less than 30%. And some traders there might be making more than that also. But it is only the amount, and it is only the kind of person one is, what I believe, that they can make that money.
Okay. So this 4% is the maximum drawdown that you have seen from the top,
Yeah.
and 25% return per annum year. And it's like reasonably higher than any other business. One of my friend has a dry fruit business and with considerable risk, and he was saying that making 15-20% is like insane in that business. So yeah.
So see, I'll also another thing that is that in Ludhiana, as I told you, there are a lot of industrialists and very big people, and they're manufacturers of very big brands. So there is one person who makes clothes for Zara. So Zara contacts them here in Ludhiana, and Zara makes them. Zara gives them their designs, and because they have such good machinery, like one machine of theirs is say worth like 7-8 cr, and they have like 5-6 of those. And apart from that, the other land cost and raw materials is completely different. And they if when I when I talk to them and when I tell them that yes, I am making anywhere more than 18-20%, they are like, yes, tum to yaar matlab pata hi nahi kya kar rahe ho. Because you know we see we as traders see a 4% drawdown as you know something that we have lost. We term it as a loss, but it is not a loss. It is a business loss. It is an operating expense. Because if you know that you have an edge, and if you know that you have a positive expectancy, it is not something that it is not I wouldn't term it as a loss. So the trader which I was mentioning, who mainly trades delta neutral, he's in net loss for January till now. But it is not a loss. It is a business expense. It is an operating expense. So like people say that they have to keep working capital for your business, we also have to keep working capital for our business for our drawdowns. The only drawback in our business is huge drawdowns. So if we can control that, automatically we are a winner. But the ROI thing is a very subjective matter, because uh, I believe we should try and build things which are scalable to any extent. If you say that I can generate 100% ROI on 10 lakhs, but if you cannot generate that on 100 cr, then you are doing something wrong. And no doubt, yeah, I know even I don't have 100 cr, and nobody. It is very very difficult to even reach 10 cr, forget 100 cr. But what is the harm in keeping a vision? If we don't even have a vision that we can grow up to 100 cr, then what is the point of our lives? Then we'll always be stuck with that 1 cr capital only, right?
Yeah, yeah. So, if you can like tell us, these traders who are working with you, all these 12 traders, are they working purely on salary or they get a cut in the profit as well?
They are only so there are three people who I had hired actually for my work. The others have been with us for a very long time, uh, managing my father's business also. So now they work. Now I have allocated strategies to them. But yes, so those uh, traders who've been with us for a very long time, they are only on salaries. But the people I have hired, we pay them very less salary and a very good commission of our profits. So 25% of all the profits is theirs.
Okay, okay. And you have allocated capital, so basically risk is yours, right?
Yes, risk is all ours.
And when you talked about like co-location and arbitrage and algo and all that, So tell us like one incident in last 2 years which exposes you to the risk which is there in arbitrage business as well, execution risk or maybe something.
So all right, I'll tell you one thing where I lost a huge. I'll tell you that thing where I lost 4% of my capital, and that 4% drawdown was in one day, and that is the huge. I mean, that is the maximum loss that I have ever made, and that was only because, you know. So, for example, if I tell you, say I got an opportunity in an arbitrage trade, and I was. Say I switched on my execution engine and I was trying to execute it. So we placed an order. So I placed an order for, say, a very huge quantity, and that quantity got filled at a very abnormal price. So it was kind of a freak trade. I got stuck into a freak trade with more than a very big quantity. So all right, so I'll give you a better example than this. Say I bought a stock at 100, all right, and I I had already put an order in my own execution engine that once it reaches 102, exit all the quantity, all right. And the thing was that in arbitrage trades, you have multiple legs. So if you're buying one leg, you might be selling another leg. So if I say the 100 rupees, say I'm in a put spread. So say you've bought one 36,000 put and you've sold one 35,000 put. 1:1, which is completely hedged. All right. So I had, and say you paid like 100 rupees for that spread. So, and you put it in your execution algo that once the spread reaches 150, book your profits. So similarly, once I executed my trade at 100, I had put it in my execution algo that once it reaches 150, exit my trade. So the moment it reached 150, that was a big drawback for me because I got to know the loopholes of my own algo. That the problem that occurred at that time was that my buy leg got exited, but my sell leg did not get exited. So it exactly didn't happen like that, but yeah. I'm to just give a better example. It just happened to me like that. So that execution algo, what it did was it exited one leg and it did not exit the other leg. And because the quantity was so huge, if I did not, so I lost 4% of my capital in like 10 seconds. I was in a very good money making position at that time. And
So execution risk is one big risk in co-location and arbitrage kind of trading, and which is like a very understated kind of a
yes,
risk, which is there. Another risk is that spread itself might be widening for some reason. The news which is still not out.
yeah, definitely.
Did that happen to you ever?
No, that hasn't happened to me, but I know a few people who have been a victim to this, and this does happen actually. I have had these execution issues like say 3-4 times already. So I have lost a good 1-2% on these say execution failures. But that is the only time that I've made an actual loss on these arbitrage trades. So yeah, nothing is risk free. No doubt, no matter jitna bhi people say that arbitrage is risk free and all that, it is not risk free. Anytime you
So
can lose anything.
give us an example of spread widening itself, for the larger audience.
So see, I don't know if people know it or not, but yes, there is something also known as synthetic future. So, say you want to go long on Bank Nifty through options. All right. So you can buy an ATM call and you can sell an ATM put. That is known as a synthetic future. So just for example, say we have we can only trade in monthly futures, right? Because we only have monthly futures. So if we buy a weekly synthetic future and if we sell the monthly future, that is kind of an arbitrage, right? Because we are buying the spot and we are selling the future of the monthly expiry. So this spread, so say Bank Nifty is currently at 36,000 and the monthly future is at 36,100. So that 100 points is what we can gain. Obviously not the whole 100 points, but yes, that is our maximum profit if we say it theoretically. So say I put on a trade at 100. So we keep on churning. We put it on 100. Say the spread goes to 115. We reverse the trade. We net 15 points and then things go on like that. In March 2020 crash, I was not into a position for this because I don't do this thing a lot. I do it, but I don't do it at a very. Basically it is not a very big part of my portfolio. So what happened was the spread which we say 100 rupees. Everybody knows the Bank Nifty future was in like a 300-point discount. So if it is in a discount, just imagine if you are putting on a trade at a spread of say 80 rupees, that 80 rupees went on to like minus 300 rupees. So you're anyway in a 400-point loss on a extremely leveraged trade. So, one lot for this arbitrage kind of trade takes a margin of roughly 25-30,000. So you have like, imagine you have 25 lakhs, you are doing 100 lots already, and you are losing 400 points on 100 lots. That comes out to be 10 lakhs. So you're losing like 40% of your capital in just one day because when the spread reversed. And there are a lot of such more examples that usually such things happen only when there is a big move in the underlying. But yes, it does happen, and anything can happen, anything. So
Okay. So my next question is a little related. I don't know how much comfortable you'll be to answer it. Nowadays, what we see is the earlier glory of Bombay Stock Exchange is kind of dying, and all the 11 other stock exchanges like Coimbatore, Calcutta, or even Ludhiana is losing market share steadily and in a very very boring fashion, in a predictable fashion. And NSE is showing strength where winner takes it all kinds of trading is happening on NSE only. So, like, do you see this trend continuing, or what are the things happening in the other regional exchanges, and is there any plan to give them to revive them?
see, I think this trend would continue because mainly because of the kind of brokerage and other options that the discount brokerage firms are offering. So, all these traditional brokers and exchanges, they don't have such easy to use software. So, go to a broker in Delhi, he would give you a very low brokerage platform, but there'll be a lot of limitations, like you have to trade on a terminal. I don't know if people have used it or not, but Odin, there is a terminal named Odin, and now software was from NSC. So it was completely different from Zerodha. Zerodha, you get all your, you can make a watch list in the left. You don't even get to know what rate is the buyer ad, what rate is the seller ad. You just get to know the LTP and just place orders. It is like at a click of a button, you're just trading. And forget that. Even my father, when he's sitting at his own office, he trades in Zerodha sometimes because he says it is very addictive. He's opening his phone all the time. He sees all stock prices and quotes at Zerodha because it is such easy to use. In our softwares, we have to first, load a script, then we have to make a watch list, then we have to add it, and then we have to choose which columns do we need. Do we need the best buyer? Do we need the best seller? Do we need the market depth up to five, best five buyer seller quotes and what not. So I don't think that all these regional exchanges can compete with them, especially us, because we have lost a lot of market share to all these discount brokerage firms, because it is mainly because we don't have that kind of technology to offer to clients, and I don't think it is going to change anytime soon.
Yeah, so I mean, but once Nitin also said, and I believe that Zerodha user interface is sitting on a third party backbone kind of which is provided by Refinitiv, if I'm not wrong.
Yeah,
Once
Refinitiv.
also they
Refinitiv
mentioned that
and their API is provided by Trade Labs.
yeah, so Refinitiv and Trade Lab. So it's like plug and play, and other larger brokers, or at least bigger brokers can definitely do it, and exchanges are having a lot of money. So is it lack of vision, because technology is already there? Like Refinitiv can provide it to you guys as well, right?
You can
So
call it lack of vision also, but uh, a big factor what I have currently noticed is the clientele. So mostly what all the clients say in Ludhiana Stock Exchange, mostly all the trading members or all the sub brokers, their clients are with them since like 20 years. And since 20 years, they have already gotten used to all that. So if they introduced all that new technology, I don't know if they'll be able to adapt or not. but they don't have the vision to, go out and spend money to make more money. Because in this brokerage business, people have always, thought this to be a free money making machine. So people don't want to spend money, but they want to make money. A brokerage in the brokerage business, it has always happened like that. So, in 2003 2004, when that actual peak was there of bull run and people were making money like anything, my father told me, if someone used to buy shares of say 1 lakh, his brokerage was 10,000 rupees. You have to pay 10,000 rupees brokerage if you're paying 1 lakh of your own money to buy stocks. Just imagine. And people were still buying and people were still making money. So, and obviously, yeah, nobody is going to pay that kind of a brokerage. And Zerodha and all those people have a vision to grow at a volume and scale, because they know that they can only make huge money if they're ready to spend huge money. No doubt, Zerodha is an outlier. They bootstrapped and they made it without some big investments. But there is a lot of investment that you have to go through, which I don't think the people and the brokerages, the head of all those brokerages, want to do that. So I don't think that we'll ever know, and I honestly don't think that no exchange can ever compete with all those discount brokers and online things, because the youth is actually getting into options a lot, and people don't want to, so even if I talk about my father also, if a client has a total account value of 1 lakh, he would prefer to go to a client with 10 lakhs, because he would think that yes, he would provide us more business. But they don't realize the fact that what if that guy who comes with 1 lakh eventually becomes profitable and grows that 1 lakh to 1 cr. If he does that, if he's able to do that, automatically our business would grow. And why not? Why can we not cater to everybody? Why do we want to cater to only a specific society? So because of those vision and other limitations, I don't think there is a good future for brokerage. I would say for brokerage based. So I don't think there is a good future for brokerage based business models anytime from now.
Yeah, even established brokers like ICICI or others, they're not giving live feed, they're not giving trading view. I mean, we always crib about Zerodha and their profitability and so on. But Zerodha from day one is giving you live charting, and for which I'm sure it must be spending huge amount to trading view or other charting softwares. I mean, if you buy, for example, I was using Cogensis or Ticker Plant, they are charging 1 lakh to 2 lakh per terminal, right? So Zerodha is giving that free of cost, whether you are trading 2,000 rupees or 2 lakh rupees. From day one, Zerodha is giving. So they are
Yes,
doing huge investment in each client without judging whether you are a big fish or whether you can trade big or not, which
exactly.
is the vision. Yeah.
You just go to a broker in Delhi and tell him that I have 10 CR, I want to trade with you. वो कुछ भी करके आपको अपना क्लाइंट बना लेगा. आप किसी को जाके बोलो आई हैव ओनली 1 lakh, he would literally buzz you out of his room ki please get lost, I don't even want to bother who you are. And that is a very very wrong approach in my opinion. That is not how things can grow in today's time. Baki you never know, but I don't think it is a very good thing to do. But still all traditional brokers are still doing that.
Yeah, I mean, look at Zerodha. It is targeting mostly students and tier two, tier three city where the things are pretty new. And once you are used to their UI, I'm trading on Odin for last 10 years, and I know the pain. Although it is like cheapest, but it doesn't give you yesterday's trades. You just the way you see it on Zerodha. I mean, all these things are like very difficult. You have to maintain a separate Excel and so on. So I
Exactly.
don't know why. I mean, me being a layman, it strikes to me that you have to offer value to the lowest guy as well, because in trading, who will grow? I mean, even one guy grows to 10x, 100x, it gives you value for money. But all these big guys don't understand.
Exactly, and that is a big limitation. I don't think they're going to understand anytime soon. So let's see.
Yeah. So like you are only 25-year-old, right?
Yeah,
And
I'm
for the
very good.
benefit of all the ladies who are listening, like Raghav is unmarried, right? Raghav? Yeah.
Yes, yes.
So so you are roaming around Eiffel Tower alone right now. So keeping
Yeah.
that aside, so what are your future plans? You're just 25, so you have like 30, 40 years of career left. So do you have made a vision or anything like that which you want to share?
My honestly, my future plan for at least for the next 2 years is that I want to grow my team of traders from 12 to 120, because I think that is the only way. Not, I won't say the only way, but that is a good way for me to scale. Because you know what I now believe is that strategy plays a very low role in profitability. A lot of strategies in this digital era, everything is already available on YouTube. Just because it is free, we think that it is not going to make money because ये तो free में दे रहा है. But it does make money. It everything makes money. 920 straddle really makes very good money. But the only
Dad, you
thing
have to
is
say it again. Yeah, for the benefit of our audience who might be sleeping at 11:30, you have to say it like 2 times more. What about 920?
920 straddle really makes good money. But if you're only doing that, then it is not going to make you money. You need to be diversified, and you need to do things at the right time. There is a time when you place a night trade for 920 straddle, and there is a time when you don't do that. There is a time when volatility increases. That is the time when you make good arbitrage trades. And when VIX is very low, you cannot make arbitrage trades. When VIX is very low, cash equity trading works brilliantly, because if volatility is low, that means the market is in a sustained single side uptrend. Maybe it is lack of momentum or whatever it is, but that is the avenue where you have to look into. So nobody can grow alone at a very good pace, and everybody's human brain is different. I still believe cash equity trading cannot make money, but mm, uh, 50% of my profit has come from cash equity trading from last year, and it is unbelievable for me till date, but it is true. And eventually the end goal is to make money, not to be right. So yeah, it is all I want to grow, but I want to make a team. I want to make a team which is self-sufficient and so efficient that they can take their decisions on their own, and I just have to So uh, I'll also say one thing, that when I was in school, a lot of my teachers and people used to tell me that तू लोगों से बड़ा अच्छा काम निकलवा लेता है अपना. Because I'm a very lazy person. I don't want to work. I never used to work, and until date I don't work. I find easy ways to do. I don't find easy ways to do things. I find people who are willing to do things for me. And if I can do that, if I can make a team for myself, that is what I want to do. I want to make a good team of coders and traders who, we can set up our own prop desk so that we can manage such huge amounts of money with very low drawdown. I do very simple strategies. All my strategies are so simple that almost everybody is already doing exactly the same thing. But, any strategy of mine is such, allocation is such that even if a strategy is not making money for like 6 months, it hardly bothers me, because there will be something else that has to make money. So
Yeah, so
that is my
basically
main
the
vision.
backbone is diversification.
Yes, that is the only thing that I've realized till now.
Okay. Being a broker, like, have you diversified into commodities as well?
No, I have not. We have diversified into USD, INR, and currencies a bit, but not a lot. Like
How was your experience
I've
for
just
USD?
I've recently started. Like, it has only been 3 months. I have recently started trading USD, INR, but we do basically. So you can say that commodities and currencies, clients, we do client trades for clients. So as in, for brokerage, the client trade themselves, but we only make brokerage out of that. We are not doing any prop trading or anything of our own trading on currencies and commodities as of now. That is an avenue that I really want to go to, but say lack of uh, experience also, and neither has my father ever done much into commodities, so I don't know much. But yes, that is really one avenue I want to go to.
Okay. In your pin tweet, you have mentioned about doing a coin toss in the morning at 9:20, around in the morning, and based on coin toss, buying at the money option and generating 80% return at the end of the year. So, like, what is it all about in layman terms, if you can rephrase it?
So when I backtested 920 straddle on StockMark first, I was a very initially when StockMark started, all their backtesting was free. So I am on stock market since then. I backtested simple 920 straddle, and I saw that yes, it is making very good money. So after that, I thought, why only 920 is making money? Even 940 can make money. So I added 920 and I took out a CSV of 920 straddle from stock market, and then I took out one from 940 also. I combined both of them, and I saw the return is similar, but the drawdown comes less. So then I thought, why not 1020, 1040, 1120? I mean, why not every half an hour? So I did that. I took out all CSVs, and then I found out the drawdown comes to be even lower, and the return is going higher. So I thought that I wanted a reason. I wanted to know, why is it making money? Why is it so simple, and why is it making money? So I just randomly made I made a Excel, random iterations on Excel, which I had like so this coin toss experiment I had done when I initially builded my I hired two coders who were doing the backtesting for me, because initially I wasn't very confident of Stockmark, because I thought maybe they're outsourced, so I thought maybe their data might be wrong, so I wasn't very confident. I wanted to do it myself. I purchased data from GDFL. I made a team of two coders, and then three of us, we backtested a lot of stuff for 3 months, and then I told them to we had data for 3 years. So 3 years come we roughly, I don't remember, but yeah, it was I think 720 or 730 days, something like that. So we made random iterations on Excel for those 720 days, and and heads meant buy and tails meant sell. I don't remember, but yeah, something like that. So after that, I thought, if it is heads, we'll just buy, and if it is tails, then we'll sell. Then I got to know that 920, the reason for 920 straddle making money is that we are cutting a loser short and letting our winner run. So, since we are selling options, that too weekly options. So, just as a matter of fact, if you backtest 920 straddle on monthly options, the returns are hardly anything. So, another reason is also this, that for 920 straddle to be profitable, you don't have to catch a very good trend any day. Even if you capture a 100 points trend after one leg stop loss gets hit on Thursday, even you can still make good money. But obviously that comes with its own limitations. But yes, it is a valid point. So that's why I made that coin toss experiment. Once I made that coin toss experiment, I got to know that risk, even if we are just randomly waiting for a 1:4 risk reward, if we get rigid that no matter what happens, we are not going to book anything if we are not getting 1:4 risk reward, automatically we're making money. No doubt the drawdown is huge, but we are still making 80% per year, which is huge. And so that made me think that the reason for the strategy making money is not the strategy, but the other elements to the strategy, which is risk reward right here. So add, what else can we add? We can add money management here, we can add diversification. So by diversification, I mean, if you have margin for say 4 lots, why sell all 4 at one time? Why we can always sell them at different times. So even after time, forget time, there is there is one person who actually gave me a very brilliant idea. He said that there are 3 phases to the market. All right, from every point of time, the market can either do 3 things. The market can trend, the market can go sideways, and the market can go zigzag. There are only 3 phases to it. Out of these three, we have to eliminate one. And by eliminate one, I mean that there has to be one place where we will not make money. We can only make money in any two of these phases. And those 2 phases is the choice of the trader. You can choose to make money in trend days, you can choose to make money in sideways days, and you can choose to make money in zigzag days. 920 straddle is profitable on sideways and trending days. Mainly on trending days, but yes, on sideways days, the drawdown is not very huge. The main drawdown comes on zigzag days. So the limitation of that strategy is zigzag days, and we cannot eliminate that. If you're looking for things to make money on a zigzag day, by zigzag I mean a W-shaped day or a V-shaped day. So if you're trying to make money through 920 straddle on a W-shaped day, your future is already doomed, because it is not possible, and you have to accept that fact. because that is a limitation, and that is why it is making such good money on trending days. So this is a very big fact that market is sideways 60% of the time, trending 20% of the time, and V-shaped days are only 10% of the time. So automatically, if our strategy is covering 85% of the market structure, how is it that we can lose money? We cannot lose money. But the expectation of making money day in, day out, every week, every month is wrong. And that can never happen. So till the time people don't accept that, I don't think it is possible.
One very good point which you said, and I also use that in my trading a lot, is that rather than selling at 920, if anybody can go and check it in Stockmark, I'm just giving a free hint that I sell 5 straddle in buying Nifty and 5 straddle in Nifty. So total 10 straddle of different stop loss and different times. And it has a max drawdown to return ratio of 17. So as you rightly said, when you mix it, then returns keep on increasing and the drawdown comes down because of the non-correlation of various time periods. So anybody can go and check that, what I'm saying. So I am done with my questions. I'll throw the floor open for audience questions. Please ask questions which are relevant to what he already spoke, and let's have more fruitful discussion. Among the speakers, Nikhil, Saurabh, Vaibhav, Vikas. We also have Nitish with us. Whenever we talk about 920, I automatically think about Nitish. I think he quit. Yeah.
Hello.
Yeah. Go ahead, Vaibhav.
Hi, Raghav.
Hi.
So yeah, I am completely overwhelmed with the pointers which you have told, mostly about the thing about the lease line and all those stuff. So my question will remain more or less related to that, because considering as like I am a small retail trader, right? And if you are saying that if someone is scaling big, then he should look out to lease, and so that the contract, all those stuff. So would it be beneficial for retail traders, small retail traders who are having capital of say 1 CR or maybe less than that, to do this lease line of thing? Plus it also depends on your, like, you are doing arbitrage, so it might be useful for you. But if I am a trend follower, or I am mostly doing a cash equity, where my most orders are triggered at market orders, where I'm putting a breakout trading, where I'll be doing the trade at SLM orders. So would it be beneficial even in the I know that it won't be possible in the beginning with small capital, but eventually if it grows and my trading cap become big, so would it be like beneficial to have such these line?
See, again, I'll come to that point that you don't need such things to be profitable, because I can see, I cannot give gyan on what you should do. I can only tell you what I did to realize what should be done and what should not be done. So here I'll tell you, see, once I was confident about a strategy, be it trend following or be it option selling, neutral strategies, I used to find out what is the reason of me not making money. I am following my rules. I am cutting my stop losses where I should. I am making the adjustments of whatever I want to do. I am doing the execution also very brilliantly, but still I'm not making money. So why is it? So if I'm trading delta neutral strategies, so if I'm constantly every minute adjusting my straddle or strangle, so over there I need very good execution. So over there, if I was losing money, I was losing money because of my execution. If I'm following the trend, I have I have recently started one strategy, it is only in testing phase, but yes, I've recently started one strategy which is solely on futures, positional, trend following, long and short both, and it is basically stop and reverse. So, and I have seen you doing stop and reverse also. So uh, I it execution hardly makes a role there, because over there the reason of you making money is finding the right entry points and cutting your losses short, writing your winners. So that means simply that keeping a risk reward right. So you really don't need any lease line servers or co-location. You you might need that once things grow, but that is also all dependent on the type of strategies that you are doing. If you're doing variations of say 920 at different times or different things or whatever it is, so if you're doing that, you still don't need any co-location, because if you're already sending a stop loss exchange to the order to stop loss order to the exchange, then what is the point of co-location? ठीक है, मतलब just imagine if your stop loss gets executed at 12, my might get executed at 11:59:59 seconds. Stop loss तो दोनों को ही लगा ना. What difference would it make? So it hardly makes any difference. But yes, it depends on the kind of work that you want to do. Maybe that can help you out.
Okay, next question. I don't have, surprisingly, I don't have any speaker request. Nobody wants to ask a question on this one. Probably too technical. Yeah.
Hello, Raghav?
Go ahead.
Yeah, so basically, you want to say if someone is having, a capital is increasing, or if he wants to do arbitrage kind of trading, then this would be eventually useful. So I believe if someone is doing like you are kind of a prop trader, and if someone is doing prop trading as a full-time trader, or so, then this thing would be more useful, right?
Yes, certainly.
But if my goals are to stay, as a part-time trader, even for the next 10 years, and just keep on going the simple trading, then I don't need it, right? Even if my capital grows.
Yes, you definitely don't need it. It is not a
Okay.
way to become. Spending so much on your infrastructure does not make you profitable. After all that, you still need a basic strategy to work on. So I really don't think that all this really matters. But yes, it does give you an edge, but that is not your only edge.
Okay. Yeah, I got my answer. Okay. Thank you.
Yes, Saurabh. Go ahead, please.
Yeah, hi Raghav. Am I audible?
Yes, Saurabh.
Nice hearing you. Got so many pointers on how to scale up and various things, and how to look, this thing as a business rather than doing it as a hobby, or of a just for growing capital. That kind of perspective. Things changes once you keep a expectation of around 25% per annum. Okay, so I have two questions. First question is, you are doing algorithmic trading as well as you are doing discretionary trading through your guys who are managing the positions. So, do you feel that keeping extra hands and discussing on a daily basis, it helps you diversify as well as scale up easily as compared to totally moving on to algorithmic trading? First thing, and the second thing is that I was going through one of your uh, uh, pinned tweet where you have mentioned about this option buying 1:4 ratio and 1:2 ratio. So, is risk to reward and position sizing the holy grail to any strategy? I mean, कोई strategy outdate नहीं हो सकता है until unless you have a very good risk reward ratio kept, and and the position sizing kept, you will make money in the end. I mean, that's the two questions. You got my points.
Yes. So, coming to the holy grail part is, yes, according to me, position sizing, money management, and diversification is the holy grail, because every strategy has its own phases of making money and not making money. So you never know when one strategy might lose its edge, and if a strategy is losing its edge, you should know the reason of it. And also, if a strategy has an edge, you should know the reason of that edge. You should not The edge should not come from a number of your backtest. The edge should be you should have a logic in your head that yes, this is the edge that I have. So once you know that, then maybe scaling up can get easy. But automation. So see, what I am doing is that a lot of my stuff is automated. But by automation, I mean, so see, if a guy has to sell an iron fly, just like I said an example, so he has to sell four legs at one time, right? If he has to exit them, he has to exit those four also at one time. So we use an execution engine for that. So that is what we call an algo. So it is not end to end automated, so it would not do everything on its own. But yes, once he switches on that execution engine, so the discretion here is when to do what and when not to do what. It is not that we will do every strategy every time, but yes, uh, you know, position sizing also matters. So just like I told you, we have stopped doing all delta neutral strategies in the last 10 days. So I don't know if it made money or not, but we still didn't do it. So that was our kind of position sizing, that we scaled down our position size on delta neutral strats, and the other strategies were still the same. So that helped. According to me, that helped me in not losing money. I didn't make money, but I didn't lose money as well. So I hope that was your question.
Yeah, you all answered almost whatever I had asked for. So what you mean to say, I'm repeating myself just to clarify once कि अगर कोई लॉजिक है, सपोज थीटा आज से 100 साल बाद भी रहेगा ही रहेगा. अगर ऑप्शंस उस समय तक रहे तो थीटा विल बी देयर, and decay has to happen and go to zero. So if there is a logic behind trade and you manage your risk reward, you are going to make money even in simple 920, 930, 940 straddles, iron condor, iron fly, whatever you do, you just have to manage, and there should be a logic that this is going to give you profits, then you are up for it, right? That's what you said.
Yes, that is what I said. But
Okay.
again, saying that the edge is not theta. The edge is somewhere else. You have to find what that edge is. The edge, no option selling strategy. There is no option selling strategy where you can claim, or you can say, or even I can claim that theta is an edge, or vega is an edge, or gamma is an edge, or delta is an edge. The edge lies somewhere else, and you have to find what it is. You have to know, according to me, you have to know the logic of that edge, because once you know the logic, you know how to scale that up. Till the time you don't know the logic of your edge, you cannot scale things up.
Okay, fine, got it. Thanks.
Okay,
Thanks.
next question, Ashish.
Yeah, Raghav, you mentioned about stop and reverse system. I'm also developing something like that and researching into it. So, would you like to provide any hints on what goes into a feasible and stop and reverse system that works, and how do you handle the choppiness?
Yeah, honestly, it is just in testing phase. We are just testing it out. I am finding different price action points, like previous day, previous week high, previous week low, and stuff like that, to come to an entry point and then accordingly take trades. So I would not be a very good person to answer that, because I am honestly trading only one lot of that. So it is just in testing phase. It has been 2 months that I have only been testing it. So I cannot honestly, give you very good insights on that.
Okay, thank you.
Yeah.
Okay, Go Margin Gaurav.
Yeah, hi Raghav, Gaurav this side.
Hi,
Yeah,
Gaurav.
Raghav, I spend a lot of my time in the illiquid single stock options most of the time, and I find that it's quite illiquid, and uh, NSE keeps adding more stocks into the FNO segment, but the liquidity is not there. You have any insight into what is the essential uh, working happening at the back end? Is there any kind of incentive that is provided to the market makers to provide liquidity in single stock options? Anything on that side?
No, earlier NSE was, I think in 2015, 2016, NSE came up with a liquidity enhancement scheme, but currently they are not. And that is the sole reason for such poor liquidity, especially across, even if you see monthly and bi-monthly expiries of Nifty also aren't very liquid now. So it is, NSE has no liquidity enhancement scheme currently. And because of those physical delivery rules and all that, no market maker is honestly, I don't think any market maker would be, keen to provide liquidity on stock options. Because you see, at the last week of expiry, if you're having some positions, then you have to buy shares or give delivery of shares and whatnot. So it is really, I don't think anybody is doing that, and that is the sole reason of liquidity not coming up. And honestly, I don't even think that the liquidity is going to go up till the time Nifty and Bank Nifty weekly options are, rocking the world.
Yeah, but in any other market, like exchanges take a lot of initiative in deepening the market or enhancing the liquidity. And previously, NSE has given liquidity enhancement schemes. So why not now? I mean, ultimately, they are going to be benefited when more liquidity is there, more
But
participants, and
but
they'll get more revenue.
what I am seeing is that the amount of money NSE is earning through index weekly options, I don't think stock options can ever match that. So maybe that's why they're not. But yeah, I totally agree with your point. They really should, because how will a market grow if you're giving such stupid and unnecessary obligations to give shares or take shares, like even if you have a covered call, say you buy a future and sell a call, and all so and the expiry your call goes in the money, you would still have to square up all your positions, and that liquidity would again kill your profits, because first that future would, if you have to give delivery, you have to give delivery on T+1, and if you have to take delivery of that buy future, it would be coming in your demat in T+2, so that 1 day gap can literally blow you up. And that is, I literally find no logic there. There is literally no logic, and I don't know why NSE is not doing that, but they should come up with it, but I don't know why they aren't.
Okay. Uh, any other question, gentlemen? I think there are no more questions now. Uh, Thank you so much, Raghav, for giving such useful insights. It's not so easy to get hold of an institutional trading firm, and inshallah, you will have 120 traders within like 2 years, my guess. And we'll see you. And sorry, one more of our friend has just joined. Nomad. Nomad, you have a question?
Am I audible?
Yeah,
Hey,
yeah. Your
Raghav.
voice is very
Thanks
sweet.
for the wonderful session, bro.
Thanks.
I have just one question in my mind. Like, when you say that you are working with 12 full time traders with you, right? So it must be a situation wherein, like, your risk is with a lot of people, like 12 people are working under you. So, how do you consolidate the risk? Like, is there any software you use to monitor the overall portfolio in check? Or
Yes. So I have gotten built, risk management tool, you can say, that I get to know. So see, obviously we have, under our own client code, we have given, like, say, account 1 to 1 trader, 2, 3, 4, like that. So I am only constantly monitoring the M2M. So you can say the M2M and the positions of every trader. So I don't check it like every 5 minutes, but yeah, every 15, 20, half an hour I keep checking that. And everyone has a loss limit, and every account has a loss limit. After that reaches, it won't even ask me, or it won't even ask my trader. The positions would get squared off in that account.
okay, so it gets consolidated at your screen, right?
Yeah, it gets consolidated on my screen. And honestly, it is a very good point that what I found is that, mm, if one is trying to come into trading full time, the eventual goal should be to become a risk manager and not a trader. Because if you become a trader, eventually you will always stay a trader. And if you become a risk manager, you will become a risk manager at a good scale. So yeah, I think that is very, very important. And yeah, there are 3 4 things like this, that there are some things that are completely out of our control also. So our execution engine would automatically square off trades or do something like that if something is going out of hand.
Got it. Thanks, Raghav.
For your options trade, and you said that when you do options arbitrage, do you place SLL or you place SLM?
See, in arbitrage we don't use SL, because the arbitrage trade is already done once the trade gets executed. So an a loss will only occur in an arbitrage trade if the execution goes wrong. And if the execution is already wrong, वो तो जब हो जाएगी we'll anyway get to know because हमें loss ही हो जाएगा. So we don't use SL, but yes, IOC and all those kind of orders we use, like immediate order or cancel. So if we get an immediate fill, we will use it, or we would then, if we don't get an immediate fill on all our legs, we would exit and we won't try it again.
Okay. Okay.
Yes.
Yeah. Nomad, do you have another question?
No other question at the moment.
Okay. We have no more speaker. I think we have covered a lot today. Thank you so much, Raghav, for your time for such late evening, and best of luck for your trading ahead. And yeah, thank you so much for your time.
Anand, thank you so much for inviting me. It was a pleasure.